Hi and welcome to the week ahead video with me, David Madden. Now before we take a look at the major events of the week ahead, let's just take a quick recap of some of the important events of the week just gone. We did see a very sharp rise in the US dollar this week. This was largely down to speculation that the Federal Reserve might look to taper its government bond buying scheme sooner than expected. In the week just gone, we saw the US 10-year yield hit 1.56%, its highest level in 3 months. And the reaction to stock markets by this was a sharp move to the downside. As we can see here on the US500, it moved sharply lower on the prospect of the Federal Reserve tightening its monetary policy sooner than anticipated. Also playing into the negative moves seen this week has been concerns that the Chinese economy might be growing at a slower rate than initially predicted. As we can see here on the US500 chart, it's been in a downward trend recently. While it continues to hold below these 3 simple moving averages, it's likely the overall bearish trend is likely to continue. A move lower from here could encounter support at 42.31. If we do see a rebound in the US 500 from here, resistance might be encountered from this simple moving average here, which comes into play at 43.53, and a break above that could target this zone here of 43.97. In the week ahead, the most watched event will be the US non-farm payrolls report. Keep in mind the most recent jobs report from the US was very disappointing. It showed that only 235,000 jobs were created. That was well below the consensus estimate of 720,000 jobs, so it really was a big miss. But at the same time, the same update also showed that the unemployment rate fell to 5.2%, a 17-month low. So in the week ahead, traders are going to be very fixated on the jobs report and wondering, will this report bring the Federal Reserve one step closer towards tapering its bond buying scheme, or one step further away from tapering its bond buying scheme? So that's likely to ripple out across volatility across the US dollar, across equities such as and indices such as the US500, and of course the major currency pairs as well as gold. Also looking out in the week ahead is we have a couple of interest rate decisions. Both the Reserve Bank of Australia and also the Reserve Bank of New Zealand will announce their interest rate decisions this week. This is the AUDUSD. As you can see, for the last few weeks and months, it has been in a downward trend. At the beginning of this week, the currency pair fell to its lowest level in 1 month. This is largely due to a broad rally in the US dollar, but it's also down to the fact that there has been concerns over China's growth rate. A couple of banks downgraded their growth forecast for China. That also put pressure on the currency pair, seeing as there's heavy trade between Australia and China, particularly in the commodity space. While the currency pair continues to hold below these 3 simple moving averages, it's likely the recent bearish trend will continue. A move below 0.7169 could see a target 0.7105. If we do see a rebound from here, resistance might be encountered at 0.7261 or perhaps at 0.7310. Also this week we have an update. We have the meeting from the Reserve Bank of New Zealand. The Kiwi dollar, the New Zealand dollar, the Kiwi dollar has been seen a lot of volatility in the past couple of months. In early September, the currency pair hit a 3-month high because it was reported that the Reserve Bank of New Zealand didn't hike interest rates at the August meeting due to communication concerns and communication issues. So there has been a lot of speculation that the Reserve Bank of Australia, there has been a lot of speculation the Reserve Bank of New Zealand might look to increase interest rates. But that being said, the NZDUSD has come under a lot of pressure recently, largely down to a stronger US dollar. To a certain extent, the New Zealand dollar on its own would fall into the bracket of a commodity currency, and commodities by and large have come under pressure recently. So that also explains the downward move in NZDUSD. So while the currency pair continues to hold below these 3 simple moving averages, it's likely the more recent bearish trend will continue. A move lower from here could see a target 0.6804. and a break above that might encounter resistance from this simple moving average here at 0 spot 69.17. And if you do have a sizable move to the upside in the NZDUSD, resistance could be encountered at 0 spot 70.26. That's all from me this week. Thank you very much.